I personally think some of the biggest pain points for corporates operating in Europe fall into a number of categories. They are as follows. One is around the volatility in the markets. Number two is around the increased regulation that corporations are having to deal with and the costs around that and ensuring that their companies are compliant. Number three is around risk management, ensuring that they've got controls and procedures in place to protect their companies and in order to support their commercial activities. Number four is ensuring they've got the right technology platform. They're continuing the harmonization process of putting in ERP systems and treasury workstations. That's now been accelerated. And the last thing I think is very important from a pain point is ensuring stability within their supply chain. Coming out of the '08 credit crisis that we had, we saw that was a major issue. We saw that was an issue after the unfortunate disaster that we saw in Japan. So that stability in supply chain to ensure that they can continue their commercial operations is the last pain point that I think a lot of companies are dealing with. I think corporates are trying to solve these issues by focusing and accelerating on a number of themes that they've already been working on, such as centralization of treasury management, going from disparate, decentralized approaches to really driving optimization and standardization within their treasury management operations. That's probably the number one theme that we see companies focusing on. Additionally, ensuring that they've got enterprise risk management policies in place and supported by continuity of business as well. Again, as they continue to grow internationally, the theme around emerging market growth means that corporations in Europe today are really growing internationally, and they need to ensure that they've got in place the procedures and policies and the end-to-end processes to support that growth. The role a relationship bank should play in these times is really around acting as an advisor. It's really a consultative approach. Rather than moving from a product orientation, our organization is really a client-centric one, where we're focused on understanding what are the opportunities with the client to meet their strategic objectives, not push the bank's own agenda. And I think that's very important, moving from procurement-type relationship to a partnership relationship. I think that change has been central to the way we've been operating with our clients around client centricity. Most of the topics we've talked about here at the conference is the volatility in the markets and the impact that's having on the banking structure. What we've seen recently with Dexia over the past several days is really giving corporations food for thought in terms of reevaluating their banking partners to ensure that the banks that are supporting their growth and their treasury management operations have strong, stable balance sheets that can continue to support them in their endeavors. There are three things that I think corporations should focus on. One is around focusing on their days payable outstanding, looking at their supply chain. How are they supporting the suppliers within their commercial activities to create stability? The other one's around what in their own organization, looking at their order to invoice and invoice to cash processes to really accelerate their day sales outstanding. Those are two central precepts. The next one is really around the whole treasury management, liquidity management theme, which we've heard here at the conference, in fact, is around how to get control, access, and visibility to your liquidity in order to really derive the greatest benefits from that liquidity, which today in many cases is somewhat decentralized, but companies with their centralization approach are really now getting control over that to add value to their own corporation. There's several big issue topics we've talked about here at the conference. Number one is around mobile technology. What's happening around the mobile space? Companies are looking for new ways to accelerate receivables and collections, which is a key theme. Companies have historically focused on payments and liquidity management through their centralization processes. Now it's all about receivables, generating cash and accelerating that cash within their working capital cycle. Number two is around regulation. It's very important as more regulation is coming to the marketplace to understand that what will be the impact of Basel III, not only on credit lines, but also on trade finance, understanding what that means to your corporation. Very important topic. Number three is around risk management, ensuring that you've got the procedures and policies. And a number of the speakers here at the conference really talked about what they're doing around putting in place enterprise global risk management structures. And the last point I'd mention is around emerging market growth and liquidity management. There's a lot of companies that still have fairly decentralized liquidity structures, and it's as they're continuing to expand into the emerging markets and grow aggressively, there are certain regulatory environments where they've got trapped cash. What can they do? How do they get control over that? And if they can't get access to that, how can they utilize the cash that they've got in those countries? So liquidity management, emerging market growth, risk management, again, regulatory environment, mobile technology, key topics here at the conference.